capital calculations, capital readjustment, capital safety, capital security. Now, we are picking it up today with capital readjustment. Like I said yesterday, capital readjustment can be done in two ways. You can readjust your capital when losing, and you can as well readjust your capital when making profit. What do I mean by this? And I use Madam Toad as an example yesterday, giving an illustration of a portfolio of $10,000. Let's say peradventure you have been working on a portfolio using $10,000, and unfortunately, the trade has been going bad, the trade has been going bad, the trade has been going bad. Like in my trading rules, I think number 9, if not number 10, says that you must learn, and you learn every day in all of your activities in the financial market. Like whether you're losing, whether you're doing well, whether you're doing good, you must learn. Each and every one of your activities in a day must be a lesson to you. So losing, maybe unfortunately, you are working based on the illustration, bringing out 10% of your capital, and out of the 10%, you are able to commit just 3% on a trade. Please, whenever I seems to be faster, you can call to my attention. Thank you. So, but unfortunately, you're doing all these things, you're following them step by step, and before you could know, your $10,000 has gone to $5,000 as a result of bad trade. You can readjust your capital. One, by diminishing the percentage. Now, you will no more base the percentage on the former capital value, which was $10,000, but you will now base it on the current value, which is $5,000. Now, you will now pick 10% of $5,000, which will be $500 instead of the total 10% of $1,000 that you have been using, whereby calculating a single trade on 3% of $1,000. That is number one. Number two, based on your experience, if your experience has actually given you mind enough, you can do what we call capital slash by 5. Capital slash by 5, you divide your total capital by 5 into 5, which is now you are having $1,000. You bring out $1,000 and commit it on a trade. You have actually done a capital readjustment either by diminishing or by increasing. These are the two aspects of it. So by so doing, but before you could use the slash, the slashing by 5 method, you must make sure that your leverage decreased, your risk level decreased, and you must increase your trading time frame. For example, maybe you always spend 30 minutes in markets trading. You must increase it to 1 hour. Maybe your leverage is formerly 5x or 10x. You must decrease it to like 3x if it was formerly 5x. Then if it was formerly 10x, you must decrease it to like 5x. By so doing, if your profit margin is always 20%, then you must decrease it to 10%. So once you do slashing capital by 5, immediately you are able to secure 10% profit. You close the trade. 10% of $1,000 is automatically $100. You repeat the same process. I am giving you this capital management also as a risk management. Try it anywhere, your money will not go, no matter how volatile the market is. So these are tips, these are skills in trading. So by so doing, and your level of trading must also decrease while the knowledge why the level of your knowledge will increase. So now, by so doing, you slash the capital by 5, and you will commit that same trade maybe like 5 times using diminishing method. You will decrease your leverage, you decrease your risk level, you decrease your profit percentage in order to reach your daily goal, and you as well decrease your daily targets. So by so doing, slashing the capital into 5, you will at least try to commit to trade like 3 to 5 times in order to bounce back your capital. So that is the method of capital readjustment when you are going lower on your capital. And when you are going higher on your capital, for example, you come to the market with $10,000, like I said, and luckily you are able to trade $10,000 to like $20,000. You readjust your capital. What do I mean by readjusting your capital? You take out $5,000 or you take out $10,000, return it back to wherever you pick it from. Then you increase your trading calculation. It was 10%. You can increase it to 20% because you have actually secured your capital in a code saving. It is called code saving. You increase your trading percentage, your capital percentage under capital management. You can decide to increase to 20%. You can decide to increase to 50%. Increase to 50% is slashing it into 2, which will give you 5,000 as the total capital to commit to trade. Then you slash 5,000 by 3%. So 3% should also be assigned to a single trade. So that is how you also adjust your capital when making profits, and how to adjust your capital when making losses. Are we following? Hello, are we following?
Yes.
I need response. I need response.
Yes, sir. We are following.
Yes.
I'm following.
Hope you are all getting it. Hello.
Yes, I'm understanding what you are saying, sir.
Perfect. So, like in any of my class, I would love you to bring your pen and jotter, because most of these things I'm supposed to be typing them, but I could realize that many people were not flowing yesterday. That was why I just dropped those little tips, and I had to stop the class. You can ask Nosifo. My class is always very sensitive, I go in a very layman language. So I would like you to bring your pen, bring your jotter, be writing down everything I'm saying so that you can go back there. There are skills, there are strategies, there are tips when it comes to trading, when it comes to capital management and risk management. Now let's continue. The next in line before we go into practical, before I start sharing my screen, is a capital safety. Capital safety is actually somehow connected to capital readjustment. One, when I say capital safety, is what you have just done by removing part of your money and keeping it somewhere. That is at the level of making profit. Then at the level of making losses, capital safety is the process of slashing 5, a 5 slashing method. Slashing 5 method, whereby you use $1,000 and commit it into a trade. The profit made on that $1,000 should be taken aside on a single trade, on the second trade, on the third trade, and on the fourth or fifth trade, depending on how many times you were able to commit the total 1,000 slashing 5 capital on trade in a day. So by so doing, every profit made on that slashing capital should be kept aside. You have actually saved, you are actually applying the method of capital safety. In case if anything goes bad, you could as well use those money, those profits to readjust your capital. That is capital safety. Then capital security. Capital security is actually having more of stable coin than some assets. Sometimes following market movement and trends. For example, you've been often told that you can have 30% in stable coin while 70% as holding assets. Out of the 30% in stable coin, let's say in derivative market, which is future and other types of derivative market, you can have maybe like 10% of the 30% or 20% of the 30% trading there, or even 50% of the 30% trading there, while the rest will serve as your capital security. That is that on that area. Please, I would like you to ask question in case you are not getting anything here. Please ask question, question. Hello.
I'm with you, sir. Continue, please.
Okay, thank you. It's like you are the only one in this class. Now we are moving to strategic trading. Strategic trading comprises of both theory and practical. And in this strategic trading, I'm actually going to take the practical aspect by revisiting what you have been taught before. This strategic trading is going to go in the practical aspect is going to go with your class and courses review altogether, because in this part, I'm going to revisit future trading, I'm going to revisit sports trading, I'm going to revisit decentralized trading, I'm going to revisit staking and farming, and it's going to be in a very practicalized way. So I want you to follow up. In fact, I'm going to revisit our future trades, setting up, and total practical. And I'm going to revisit price action somehow or somewhat using trading view if time permits us. Now, before we take up strategic trading, let's go to identifying long time and short time trading. I could have loved to type there because I actually had them typed down in my last class of last session. So when we talk about identifying long time and short time project, there are various factors that we need to look into. And the chief studying case of this topic of this course is fundamental analysis. Fundamental analysis simply means the terms of making more researches on the historical base of any token aspect, historical base of any token or assets, their project outlines, their history, everything about them. That is what review or research, that is what fundamental analysis is all about. And just like I said earlier, the major factor in the in knowing long time and short time and mid time trading is based on fundamental analysis. How to identify your mid time and short time trading. One, when you are being given a project, you should look at, number one, when the project was founded. Number two, the dev, the developers and the tech team in the project. Number three, the community driving the project. Number four, the basic foundation of the project. Number five, what they are actually going into. like their vision, their goals, their aims. Number 6, you come to roadmap. Number 7, you come to white paper. Number 8, then you look into the future of what they are actually promising. Then number 10, the trend, because crypto itself is based on trending. Crypto is based on trending. So now, how to identify them? When you might have gone through all these things, you will now know if this particular asset is worth investing it or not. How to follow them up based on longevity, maybe to hold them for a long time, short time, or mid time, is following up. What do I mean by following up? Moving forward, you have identified this project, you've identified their project outline, you've identified everything they have in stock. Are they really following up all these things based on their roadmap? That is the number one factor that you should know before considering any project as a long time. If they are following it up and the community is up to date, then fine. You can pick up such projects as a long time. But if they are not, then you can categorize that project on a mid-long time. And if they are somehow following up, you can categorize that project also on long time. But if they are not, just base it on trending. Whenever you put in money there and you are able to see maybe like X2, which is 100%, or X3, which is 200%, which is 300%, or X4 also, what do? You take out your money. You might decide to sell such project totally. Maybe later in the future, looking back to it, they've started following up based on what they actually outlined on their project outline. You can look at putting in something there. But one thing I will tell you is this: no matter how you are holding on to a project, whether long time or mid time or short time, try as much as possible to apply the method of capital security. Capital security. Always try as much as possible to secure your capital, because in crypto or in any spheres of business at all, capital management should always come in. On no account should you not or secure your capital, because when you lose guards on your capital, you've actually lost out. That is why so many people will come, they'll be telling you, I don't have money again. And because you have actually lost guard on your capital. You have done everything, you have lost most of your capital, which is not actually done, which is not actually good. So try as much as possible, even if you are not securing all your capital, try as much as possible to secure at least 10% of your total capital. No matter what, 10% of your total capital should be well secured. Let's continue. We are still on identifying long time, short time, and mid-time project. What is actually long time? Long time are types of projects that you have decided to hold for a very long time. And long time can only be categorized as investments. Mid-long time can also be categorized as investments. Short long time can also be categorized as investments. Short time, well, can categorize as mid investment and cannot as well be categorized as investment, because in most cases, you choose time frame for your investment. You choose time frame for your long time and short time project. Most cases, long time projects start from 6 months, 1 year, 2 year, 3 year, 4 year, 5 years, and so on. Mid-time, long time starts from 3 months, 6 months, 1 year, 1.5 year, 2 year maximum. Mid-short time can be 1 month, 2 months, maybe you buy some token and you wish to hold them for some little profit, 10%, 20%. But unfortunately, as you buy them, they go down, they go drastically down. But your fundamental analysis is actually guiding this token, giving you hope that, okay, well, this token can actually turn to my mid-short time. Then you decide to hold them. You can decide to hold them for like 1 month, 2 months, 3 months, 6 months maximum. That is mid-short time. Then when we come to short time holding, we are talking about 1 week, 2 weeks, 3 weeks, 1 month, maximum of 3 months, maximum. Because any short-time investment, any short-time holding should not be backing up with much fundamental analysis, or might be backing up with much fundamental analysis, but should never be backing up with aims of holding for a very long time, because it's actually going to wound your capital. And most of short-term investment, we commit big capital to them because we are taking them on assets, not on derivatives. Hello, are we following?
Yes, we are following.
Yes,
Yes,
please.
yes.
Okay, that is great. In this place now, you should also know the difference between investors and traders. All this comes in under identifying long-term came in. So you should not categorize them under trading and investment. Now, knowing which one you are doing exactly. When you are holding a portfolio that is meant for, when you are holding a portfolio that is meant for short time, more than the level that it should be, then that means automatically you are turning them to long time, which is not supposed to be. So there are factors that should be guiding you. There are what you should know before you can actually decide on such trade or investment. So now, what do I mean? Knowing the difference between traders and investors on identifying long-term and short-term projects. This is also part of strategic trading. Now, let's roll on. Please get your pen and paper. Get your pen and paper. It's very, very important, because all this thing is going to be guiding us when we will enter full-time practical, which will be starting from today or tomorrow, totally. So get your pen and paper. Get your pen and paper. Get your pen and paper. Sorry, trying to get my notes as well. Sorry. Get your pen and paper. Kindly get your pen and paper. So when you are done getting your pen and paper, say I. If you are done getting them, say I. Now, when we talk about differences between investing and trading, that is investor and a trader, in a simple time, if you put them together, investing or investment simply means putting your money into financial schemes, shares, properties, or a commercial venture with the expectation of achieving a profit. You understand? When you decide to put in your capital, your money, somewhere with a great expectation of making profit. But don't forget, whenever you are thinking or reasoning about investment, always have it at the back of your mind that challenges might come. You can also make losses, but then it always comes with expectation of making profit. Why traders can be defined as the action or activity of buying and selling goods and services, assets or value of a thing. Just like I said, a trader looks towards short time, while an investor looks towards long time. An investor or investment is simply means putting your money into somewhere, financial scheme, financial market, property, asset, or commercial, with expectation of achieving profit. Why trading or a trader simply mean the action or activities of buying and selling goods and services or assets or value of a thing. They are all coming with the expectation of making what? Profit. Hello. Hello. Are we following?
Yes, we are.
Okay. Don't worry, I'll still paste all these notes for you. So,
Yes, yes.
okay, perfect. Now, when it comes to wealth creation, there are some major factors that you need to consider. However, investing and trading are very different approaches. Yes, they are very different approaches of creating wealth or wealth creation or wealth generation or generating of profit in the financial market, whatever you can call it. Okay, imagine today, maybe a friend of yours bought an equal amount of a seed to sow. Maybe a friend of yours bought something and leave it for a very long time in order to earn profit. And you, as someone too, you buy that the same thing in order to earn profit, but your friend keeps his own or her own somewhere. Why you see a little profit on your own and you dispose it? The difference here is time frame. You've gotten your own, you've disposed it based on your own profit appetite. But your friend decided to sow his own somewhere, aiming, holding. So your friend is actually an investor, while you are a trader, because you buy immediately with a little profit, maybe under 24 hours, 2-3 days, you sell off. But your friend decided to hold maybe for a month, for 2 months, for 1 year, 3-4 years, and actually make maybe like 10 times or 100 times of what you have made. That is investment. So this is simply the difference between investor and a trader. And I'll give this example and also this story. Maybe I said, imagine today you and your friend bought equal amount of a seed to sow in your fields, but you sold them to someone in a day because you could earn profits, and your friend sold the seeds and left them grow for a few years till they gave new seeds. He sowed the new seeds and continued this for years and sowed a lot more seeds eventually than were bought. You understand? So by investing his seeds, he could have made profit quite different than what you made by trading your seeds. This is simply the difference between investing and trading, and investors and traders. So to learn or to earn the same financial markets, let's look at this. These are 5 keys and factors. Number 1, when you are coming to financial market, you as a trader, you as an investor, looking at long time or short time projects, or identifying short time or long-term projects. Now that you have identified long-term or short-term projects, how do you manage them? This is actually where we come to this area of identifying yourself, whether as a trader or as an investor. So the 5 key factors: number 1 is your time and your period. Number 2 is your capital growth. Number 3 is your risk level. Then number 4 is your skills and tips that you use. Then number 5 is capturing the right opportunities. These are the 5 key factors, 5 key differences that you should look into. Number 1, period and time. Differences between investing and trading, or investors and traders, is actually time. They are trading, the method, holding of stocks, a short period of time. It could be for a week, just like I said earlier, or more often a day. Trader holds stocks till the short time high performances and they sell. That is the time and period. Why investors or investment, they hold for a longer period of time. So what is actually different? The time, the period. Then number 2, capital growth. Investing versus trading, or investor versus trader. Traders look at the price movement of stocks in the market, just like how you were taught price action. Price action can also move or go with trendings. When it comes to trendings represent hype. Hello, are you following? Then when it comes to price action actually represents both technical analysis and fundamental analysis. 2 of them also fall into these 2 categories. And in capital growth, as a trader or as an investor, you must consider these factors. Traders look at price movement of stocks in the market. Just like when you create your charts, you look into them, you know when market moves, you know when market is going to dump, you know when to short, you know when to long, using your price action, price movement. Then if the price goes higher, traders may sell. Simply, trading is skill of timing. The market, whereas investing is an art of creating wealth. Trading is an art or a skills of timing the market. While investing or investment is an art or skills towards long time, towards holding, or probably recompounding, compounding on an interest or dividend over the years. You can also do this by holding liquidities in stocks or crypto assets. Then number 3, there is risk. Risk in investing and trading. Both trading and investing imply risk. Yes, both of them are risk. High risk to say. But the risk in trading is higher than the risk in investment. Because when you are investing, you are holding an asset. But when you are trading, you might lease an asset. You might borrow an asset. You might loan an asset. You might not actually be holding an asset in trading, because you take assets for trading. You trade assets. You are not holding assets. That is why the risk is higher. Why the risk in investing is a little bit minimal. Despite that both of them are volatile, because it is crypto and it is, of course, financial market. And just like I told you yesterday, always have it in your mind that everyone is coming to the financial market to win. And some must lose before some will win. So you must apply your own strategy of trading, your own strategy of investing. Hello, are we following?
Yes, yes.
Okay, now, since investing is an art, it takes a while to develop. Investment takes a while to develop because you will be like, wow, however would I leave my money? However would I leave my $100 in a project for 1 year, for 2 years, for 3 years, for 5 years? And I will be looking at it. So it's actually somehow difficult. It's an art that you must develop. It's an art that you must develop. That's why I always shout, take profit. Take profit. Me, I preferred whenever you are holding a project for a very long time and you have seen X2, X3, X4, remove your capital. That project must dump. It's a must. If it keeps going up, that means it's not a crypto. That means it's not going to be sweet. It must dump. And whenever you've removed your capital, which means by taking profit, even if it goes up, go to heaven. Never blame yourself for removing your capital or for taking profit. Just keep watching it. So whenever it goes down, you can easily buy back if you wish to buy again. Having rest of mind that your capital is already out. It's just certain. Then you can decide to hold such project as long as you can. As long as you can. So, number 4, which is art and skill. Now, let's look it into this way. I will read a note. Let's learn it this way. Trading is a one-day cricket match, while investing is a test cricket. You could watch skillful players. I'm using this as an example in the team who are expected to strike 4s or 6 to score higher goals in a one-day match, whereas the art of the game is seen in the test match. Similarly, traders are skilled. They are skilled. They have technique. They have what we call techniques. They are technical individuals who time the market. They time the market just like a player can time a match and decide, okay, I want to score up to 2 goals. I want to score up to 6 goals in a match. And learn market trends. They always learn market trend in order to hit their higher targets and profits in a stipulated period of time. This is related to this psychology of the market. Just like I told you yesterday that this crypto market trading is 70% psyches, while 30% skills. So they must always move with the market psychology. They must always move with the market psychology, whereby timing themselves because they have targets. So this also leads to some traders' failure because they are always eager to meet up on a target and to earn profit. Whereas investor on the other verge analyze the markets, they do fundamental analysis, they make researches, they ask questions, they follow the projects up, they follow their social media, they follow their development teams before they invest. Because investing also includes learning businesses, which is fundamentals, learning business fundamentals, and commitment to stay invested for a longer time. It is also related to the psychology that runs in the business. Yeah. This also follow the psychologies that runs in the projects that you may want to invest in for a longer period of time. Then capturing the right opportunities, which is the winners of trading and investing. As a trader, you put your money in a trade for short time. You buy and sell fast to eat the higher profits in the market. That is making the opportunity available for you yourself. And in this case, missing the right time to place your trade might lead to losses, which is actually the failure to capture the right opportunity. Because as a trader, you look at the present performance. Oh my God. I don't know if you follow up your price action very well. You look at the present performance as a trader in order to hit your daily profits. But investors themselves keep away from the trends and invest in value. Just like I said, you must know the value of that project, making researches, knowing about them before you could consider them long-term holding projects. With patience, you hold them and wait till they reaches your potential. Ultimately, the ones who achieve their financial goals are successful. So these are the basics. These are the factors. So now, if you go back to everything that we have said now, you will know that an investor or investment stands the chance to win more profits in a long time, while a trader looks at the present. Well, traders or trading an asset for short time also makes profits. And as well, they expose themselves to more risk, which will be teaching some strategies, some ways that will guide you through all these things. So in my conclusion here, traders keeps market running, the investors keep the market scarce, because investors, they buy large quantities of assets. Take for example now, I decided to buy BNB and I am having $100,000. I buy. Another of my friends is having $50,000. They buy. Maybe Nosifo have $100,000 she bought. Or maybe Honorable Clovis have like $70,000 he bought. All of us will buy with the aim of holding it. Automatically, we have made BNB to be more scarce in the market, and the prices will actually surge because the demand was very high at that period that we are buying with huge money. So that is why I say traders keeps the market running. Traders, what they do, they keep the market running. Every day they trade. They make sure that the market is running, it's creating trading time. The market is creating trading time. They keep the market running, creating volume for the market. While investors, they keep the market scarce, but both of them are sources to make price surges. Yes, because as traders are trading, they are buying, they're selling. It's also increasing and creating value to the price of that asset. And as investors invested and they are holding, it also creates values because it will make that such asset to be very scarce in the market and the demand will be very higher. So investing takes diligent research, just like I said, in order not to fall for a scam project or loss of money. Investing takes diligent research in order not to fall for a scam. So every time you are trading or that you want to invest, you must make diligent research on your investment. While in the other hands of trading, you must always be with your charts. Know the market movement. Know the market price movements, know the trending and the hypes at the moment as a trader. Hello.
Yes, we are with you. We are with you.
So any question before we go ahead? This class is going to end in next 10 minutes. Just 1 hour. Any question before we go ahead? Any question? Please keep your question coming. If you have any question before we go ahead. Oh, Nana said I can't see main screen. Yeah, I've not started sharing the screen. I've not started sharing the screen. So I'm still waiting for your question.
Mr. Raph,
Yeah, thank you. I'm with you.
you say your differences between trade and invest. And then you say number 1 is time, number 2 is capital growth, number 3 is risk, number 4 is skills. What is number 5?
Number 5. Okay, I will copy those things and paste to the group now.
Okay, good.
Okay. Number 5 is capturing the right opportunities.
Is what?
Capturing the right opportunities.
Okay, thank you very much.
Okay. Question. Okay. I think we will go ahead now. There's no question. Or maybe you will understand what I've been saying and you are flowing with me. So, but I will ask you question now. If you are not asking me question, I'm going to ask you question. So now we will be going into strategic trading. So now in this strategic trading is where we will revisit future trades, trading setup, future trading setup, practical. Then we will now practicalize risk management. Okay, everyone open your Binance app. Oh, some of our South African cannot access Binance, right?
Yes, I'm glad you
Wow.
remembered.
This is very serious. Some of you cannot access Binance. This is very serious. Hello. Sorry. So, oh, wow. This is going to be a very big challenge. It's going to be a very big challenge. This is going to be a very big challenge. So I think we will have to. So you, Nasifo. Hello, Nasifo.
Oh, sorry, I forgot I'm muted. Yes, sir.
Okay. So you cannot access Binance or you cannot trade future.
Oh, it's only futures you can't trade on Binance. You can trade spot.
Wow, this is very serious.
Only spot we can trade.
Only sports you can trade.
Mm-hmm.
You know, we normally use Binance because it's the largest crypto trading exchange and the most used, of course. I don't know which other exchange do you trade future with in South Africa?
Coin, Bybit.
KuCoin and Bybit.
Also,
But I believe
I noticed Bitgate is good also.
Bitress,
Bitgate.
BitTicket.
Oh,
Okay, BitGet. BitGet. Did you say BitGet, Grandma?
Yes, Bitgate, yes.
Okay. Wow. I don't even trade future on any exchange except Binance and Gate.io. I think
Oh
that's
yes,
the only
we
two places.
also have access to Gate.io.
Yeah, there's Gate also. So it's Bitgate, Gate, and KuCoin. Those are the ones I've noticed. They are in all countries.
I've traded on KuCoin, but not really much.
So maybe
Okay.
let's go to KuCoin. I think it's because Victor has been using it also a lot on us for the new coins. So it's good to get used to that. So let's go on KuCoin.
Okay. We will go on KuCoin.
Yeah, because Victor has been giving us
most
some new
of you
coins
know,
on it.
but I believe most of you knows how to set up trade.
I don't know
Future
about
trading.
others. I do. I don't know about others. I do.
Please speak up. Sorry.
From which countries are the people here? They must talk. From which countries are they coming from? Which exchanges are they using to trade? They must tell us.
Even OKX, it's fine.
Which one?
KX. OKX.
Okay, for futures.
Yes.
Wow, this is serious.
Sir, please, you still need to lecture us on how to set up a trade.
OKX is good, but comparing the two, I think KuCoin is better.
But I think KuCoin doesn't have most coins.
No, it does. That's why I find. That's why I find in the morning, Victor was giving us even the new coins.
We don't really need much coin. We only need few to make practice. And some of my skills and strategies are better used in Binance. So I don't know. Okay, I'm trying to check out something on KuCoin. KuCoin is more like Binance though.
Exactly, that's what I thought. It's quite good, KuCoin.
More like Binance. Your Emma, your Bully, Bulinga, Yogi, Sogmark, then Kaji, then RSI Rising. Okay. Can you see what I'm doing?
Yes.
Can you all see my screen?
Yes.
Okay. Okay. Trying to find out something. Oh, okay. So, I will need to fund money here. I don't think I'm having money. All the portfolio has dipped so down. Oh, okay. We will just add to transfer money to this to KuCoin, while we will also use Binance though, because of some people who can access Binance. Okay, it's quite simple. When you come to market, this is your KuCoin trading application. This place you are seeing now is called Homes. Hello, can you all see my screen?
Mm.
Okay.
Yes,
This
we can.
place you're looking at right now is called Home. You can call it the interface as well. You can call it the interface. You can call it the interface. So this is the home, the KuCoin home. Then this place, it's quite simple how to navigate this application, but let me just run you through on how to navigate them. If you look down here, you can see different options. We have the market, we have trade, we have future, we have assets. These assets, let's start from home. Home is actually the interface where you can see something that is going on, where you can follow, visit any other places that you might be going. Why all these ones, they are just shortcuts. There are also other ways in which you can get to this place. Market simply means, you all know what market means, where coins are listed, where you can find coin, you can add your favorites, and so on and so forth. So while trade is where you place your spot trade. But there's one thing in this KuCoin which is quite different from Binance, is this: you transfer your assets. They have wallets. They have their own spot wallet is where all money comes to. If you want to do anything at all, you transfer from that wallet to any of the wallet. You have trading wallet. Before you could trade, you transfer wallet to your trading wallet. Unlike Binance, once your money comes to your wallet, you can from there trade. You only transfer to your derivative accounts, maybe your future wallet, your funding account, and all that. Why this one is future trading? This is actually the interface where you trade future. There are also so many shortcuts here in which you can use, which is one, you can from here check your charts. This place you can check some tools. There are some tools: future bro, trading bots, future preferences, USDT transfer. You can from there is a shortcut to transfer. Trading unit, futures tutorial. You can watch future tutorial here. The deduction coupon, funding calculator, and all that, risk limit and all that. While here is your limit. You can place on limit order, you can place on market order, just like you were taught. Here is your margin. Now let me explain margin. Margin is simply means the amount in which you input in a trade. That is your margin level. While your leverage, which can also be called margin, is actually means the leveraging backup of your assets that you want to trade, because it is called future. Future actually means what you are doing ahead of something. Maybe you are trying to determine the future of something, be it backward or forwarding. Backward simply means when you are shorting the market, then Forwardness means when you are longing the market. So something can be in the future. It can be backwardness, it can be forwardness. So that is how it is in this future trading in crypto market. So this is what it means. Now let's go. I'm still coming back here. Fully. So why asset is where is your normal wallet, where your stuffs are safe. So like this is what I'm saying. If you look at my main asset now, there won't be anything there because I can only convert from. I can only convert from here. I can only send out money from main wallet. I cannot send from trading wallet. If I could withdraw money here, I must first transfer the money from my trading wallet down to my main wallet before I can withdraw. And anytime I as well deposit money, it will come to my main wallet. So before I can use the money for any type of trading, I must transfer from my main wallet down to my trading wallet. Then I can then trade any of the asset that I want to trade. Then I will still transfer from trading to future before I can trade. So unlike Binance that you can only transfer from one place to whichever place you need the asset for trading. Now let's go back to home. So as you can see, this is the home. We have so many things. Deposit. If you want to deposit crypto, once you click on deposit, you type in the name of the crypto in which you want to deposit. And mind you, we have so many blockchain networks, just like we have our local networks. We have MTN for those of us in Africa. We have Globalcom. We have Zoom. We have Movo. Yes, we have Etisalat. We have Realtel and so many and so forth. So also in blockchain technology, we have ERC20, which is Ethereum blockchain based. It always starts with OX. We have Binance Smart Chain, which is a Binance Smart Chain blockchain extension. We have BNB chain, which is a Binance native blockchain. It always starts with B. Binance Smart Chain is a bridge to Ethereum, but it runs on chain using the native BNB coin, but a smart blockchain. So we also have the Bitcoin blockchain, which is Omni.
Anyone at home?
Yes, we are here. I think Raph was noise. I think you must be taking care of that now.
Okay.
We'll wait.
I hope my sister, you're taking the notes. Hey, oh, Mama, I don't have electricity.
No, we are recording.
No, besides the recording, those ones he was giving out, were you not writing them to just
I did
give
right.
your mother?
But they will do the recording as well. The 5, I think he posted them on the group as well.
Oh, okay.
The
Because I
5
was just
factors
thinking.
for trading investor.
Yeah. Yeah.
Maybe let me pause the recording so that we can talk. Oh, he's the host now.
He's back. Is he back now?
No, he's on mute.
Oh, okay.
Maybe let me. Oh, I'll have to claim my. I'll have to claim my. And then I'll have to do. I'll just.
Oh, okay, like I was saying. So there are different types of blockchain actually, like I've mentioned. And as the crypto world is really increasing and gaining more adoption, of recent, we've had the likes of Polygon, which is Matic. We've had the likes of Betchain. We had the likes of Solana. We've had the likes of Avalanche. We had the likes of Phantom. We've had the likes different and so on and so forth. So this is the beauty of adoption. Now, whenever you want to withdraw, you must make sure that the wallet you are being given to do your withdrawal or to do your deposit is corresponding with the token that you want to withdraw and of the same chain and of the same network. You must make sure that, because any mistakes or error on this will lead to loss of fund and is forever and is irreversible and might not be recovered as well. So that is it on that aspect. So whenever you want to withdraw or you want to deposit, whenever you want to deposit, you come here. That is it. Then here represent new listing. So any new listing of coin, any coin that they just
Sorry,
listed.
we can't see your screen now.
Oh, I'm sorry. Let me reshare. How about now?
Yes, we can see now.
So here represents new listing. These are new listed coin, maybe coin that are not yet been long, they were listed. You can see vision. So somebody was asking our coach Skills how manage he got all those coin he was posting in the group. Someone was asking him in one of our community group. So this is actually where you get them. Cocos has actually been existing for a very long time, but they did their main net, so and now released. So that's why you can see them here. So these are the new listing, the new listed. Then here is we don't have any business here. They call it trading boat. This one is the KuCoin bonus and all that. Okay, I think at this point we are going to stop here while we continue tomorrow. Please try as much as possible not to meet tomorrow's class. Invite those that you know who are not online, because tomorrow we are going to go more deeper. We will do practical tomorrow. I'll be showing you so many things and how to trade, how to set up your trade, and also how you can be making or securing 5 to 10% of your daily trade every day with lower risk on any signal call given or on any signal call provided by you based on your technical analysis. So any question? Hello? Hello?
Hi, how are you?
Can you hear me?
Hello?
Can you hear me?
Yeah, bo.
Yes.
Okay. So any question? We are rounding up already, so you can go back and study. There is no question. Everyone is saying no, no, no. Please bring question on any lecture at all. Just bring question. You can ask me anything. I'm not even seeing any question in my DM. Nobody is chatting me to ask me question. And I believe you are here to understand most of the things. Some don't even know how to use Trust Wallet. Some don't even know how to swap. Some don't even know how to convert ERC20 to BEP20 using decentralized exchange. And it's there. So there are a lot of things. Crypto is endless. There are a lot of things that you should know that you can know. So don't be afraid or don't be ashamed of asking question at all. That is why I love Madam Tendai. She can ask anything. She disturbs me here and there until I give a satisfied answer before she can leave me, which is very perfect. That's best. If it will cost me running you alone on video or on anything to make sure that you understand, I can do that because your success is actually my priority. Don't mind my instability because I've actually been holding so many things at hand at the same time while your coaches have been taking you on lessons. I was busy arranging so many things for RCA because there are lots on ground. There are lots. We are still going very far, but we are taking them gradually so that it will not be a things of rushing in and rushing out. So whenever we are going to launch what we have on board, is going to marvel everyone. So please always do well. Try to ask questions. Try to practice what you've been taught. Crypto is not just all about making money. People are coming here with the mindset that some people are joining crypto, they are making millions, they are making no, it's not like that. Yes, you are going to make money, you are going to make millions, but there are processes, there are things you must know also. You must get knowledge. Any wealth or money made from knowledge lasts longer. Yes, wisdom, you can speak up. Wisdom, you can speak up. I can hear you. Hello, wisdom. Nasifo, I think at this point we have to end the meeting.
Okay.
Is he there or he's got a name on the group, but is he there? That's the question.
Everyone is well fed and